Hi and welcome to the week ahead with London Capital Group, where today I'm joined by market analyst Ipek Ozkardeskaya. Ipek, we're heading into the third straight weekend with Greece in focus. They've today submitted a new proposal to the EU. Going into the weekend, is it a difficult one for traders in terms of how they should actually position themselves?
Well, it actually is, because we have seen some very interesting developments over the past day, I would say. So until yesterday, the market was giving a higher probability to a Grexit because a deal would not be reached. However, Greece surprised us by submitting, first of all, a proposal by the deadline, so it respected the deadline, and moreover, it's said to be very close to the June 26th proposal from the creditors, just before Greece missed its IMF payment on June 30. So this is very interesting to see that Greece doesn't want to leave the euro. What happened? So the no referendum is completely in the garbage for those who are wondering what's happening right now, because when Tsipras went to the Greek population and said, do you want the bailout, do you want this bailout which has been proposed from the EU and the IMF, the Greek population said, no, we don't want a bailout, we want other negotiations. So what happened in between is that after the no vote, when Tsipras went back to the EU and he said, okay, we want another kind of bailout or other negotiations, the EU said, no, it's not only about bailout, it's going to be about the euro. So as we are now discussing very seriously the future of Greece in the eurozone, I think that Greece is ready to make much more compromises in order to get this deal sealed and avoid, first, a very painful default, second, a bankruptcy, and third, an exit from the eurozone. So this is why now the markets today are very optimistic about a deal. So the deal is there. By Sunday, July 12th, the EU officials will decide whether or no they are going to continue to with the bailout talks with Greece, and they seem to be quite positive on the issue.
So what would that mean for the market open on Monday?
So we have seen the last 2 Mondays, we have seen some gap open on the downside. If we see a Greek deal, that means that we might have a relief rally on the market. So that means a higher euro across the board, a higher indices, European indices. So it's just going to be a relief rally. Everybody will have more clarity that Greece is going to stay. It's going to give more credibility to euro. Euro is not euro will be irreversible, or it's not going to be reversible, and it's going to be good for the integrity of the whole union.
Okay. Well, we've got several central bank rate decisions next week. We have Bank of Japan and Bank of Canada. They're both on Wednesday. We, of course, also have the ECB meeting on Thursday. Which one do you see as being the biggest market-moving event?
Well, obviously, the BoJ is expected to maintain the status quo. The ECB's decision or the rhetoric is going to depend on what's going to happen in Greece, so we cannot really talk about it today. However, the BoC is expected to turn a little bit more dovish, given that the falling commodity prices seems to be affecting the Canadian recovery very seriously right now. And as the other central banks, especially the commodity currency central banks, are moving towards a dovish stance, there is no reason for the BoC to keep pushing towards a tighter monetary policy. It might be good for the Canadian recovery to have a little bit looser monetary policy, and Powell is well aware of the fact that the market conditions today, especially with what's happening in China, is favorable for a release or a looser monetary policy in order to put this economy back on its feet.
I mean, there is renewed speculation at the moment for a 25 basis point cut from the Bank of Canada next week. Are you pricing this then into your base case scenario or not?
Well, the consensus is still 0.75% stable rates, but we cannot rule out the possibility of a 25 basis point cut. At this stage, with the Fed, with Fed expectations being quite crowded, we don't really see a cut by Wednesday from the BoC, but we know that the rhetoric is going to be, or the buy is going to be quite dovish, and it will leave the door open for a 25 basis point cut from now to the end of the year.
Okay, what else are you focusing then on in terms of market moving events next week?
So we've got the UK CPI, which is expected to come in flat on year. This is not going to change the market because we think that the BoE will still sit on its hands. There is no reason for the BoE to rush to a rate normalization at the current situation. We have seen that the manufacturing sector has performed quite badly. It was 3 months of worst performance since 2013, so that should be taken into account, even if the services sector has been good. With the new UK budget a little bit tighter than expected, it's going to be a good thing for the BoE to keep the policy loose and not really make any changements at least until 2016. So the UK CPI should not have a heavy impact on expectations for the BoE. One last thing, which is the most important, I think, is going to be the Chinese GDP. Yeah. The Chinese GDP is expected to slip below 7%, so the consensus is 6.8%. If that happens, that's going to be a real issue for global. It's not going to be an issue only for the Chinese growth, but the whole global growth, with an economy which is worth $10 trillion. So with the commodity prices already quite at lower levels, we might expect maybe a subdued recovery and even more impact on especially Australia, emerging Asia, and from there it might spill over the US and finally to the Europe.
Okay, well, finally, just to wrap up, what are we looking at for trade idea of the week?
So we would still avoid getting into the direct euro-dollar exposure because it's going to be a very highly volatile market. Volatilities are going to be two-sided, obviously, because we don't know what's going to happen, and the hopes of a deal are now there. So we would be looking at euro-yen. So we were looking at euro-yen last week. It got good support at the daily cloud base. So now we might expect that if a deal is heard by Sunday, we might expect the euro-yen to cross over the cloud top, which is at 137 levels, and we might be looking then 140.42 will be on radar.
Okay, all right, lovely. Thank you very much, Ipek. That's Ipek Ozkardeskaya there with the week ahead. Good luck trading, traders, and goodbye for now.